Hello, my name is Andrus Treier and I'm CEO of Environmental Investment Center, and I'm honored to host the next session about the financing. And together with me, there are outstanding people from the field, and I call here Rodrigo Cassola from the UN. Nice to meet you. Then Maja Mikosińska from European Commission, as it says that hopefully somebody is. Yes, there is somebody. And dear colleagues from Estonia, Valdsalu from Single Earth, and Kadri, Vunder, Fontana from Commercial Bank in Estonia, but representing kind of financial view. So please. So, thank you for the interest, and as it was mentioned already in the first presentation, that yes, of course, there is a lot of things to do in regarding the preserving the nature and grasslands, meadows, etc., but we need some funding too, and I hope that we can dig into the topic a little bit more. I don't know if we solve the issue today, but at least we try to give you some kind of background thinking and information that why things are moving economically in such a way as they are currently. So first of all, I introduce the panelists and then try to maybe dig into from the global view to European view, to financial sector view, and entrepreneurial view as well. So we have kind of good set of panelists. So maybe just starting in a row, Rodrigo Cassola. Rodrigo is a Principal Specialist, Nature and Finance, UN, Environmental Program for Conservation Monitoring Center, and has more than 20 years of experience already in the field. And he's responsible for his experiences in the crossroads of business, finance, and biodiversity. And he leads UNEP-WCMC Finance for Nature work stream, and his kind of specialty is a natural capital, probably in addition to economic kind of human capital and technical capital. Maja is representative of CINEA, which is Life Environment unit in European Climate Infrastructure and Environment Executive Agency called CINEA, which is probably quite familiar for many of you. And she has been working in the Commission since 2007, and since 2022 she's deputy head of this unit. Then Merit from Single Earth, which is kind of, I would say, startup company, or at least very much involved in new technologies regarding the kind of quantifying the nature in a way. And she's an Estonian entrepreneur and environmental advocate, co-founder and CEO. And Single Earth incentivizes landowners to preserve natural ecosystems by offering financial rewards. So pretty interesting thing and thoughts, I believe, that on practical level how to attract the investors and investments into the area. And last but not least, Kadri Vunder Fontana. She's group head of sustainability in Luminor Bank, which is a commercial bank active in Baltics. And Kadri is a strategic sustainability leader with passion for driving positive environmental and social impacts. So, and she's also a member and founding member of several Volante, which is champions innovative solutions to protect biodiversity and the natural world. And as a head of group sustainability at Luminor, she builds up financial institution capabilities to assess nature impact on financial portfolios. So kind of very distinct and broad views on things. And me, as a representative, it was mentioned also that the Environmental Investment Center has been involved in financing different climate-related and nature-related projects since 2000. So over 25 years, we have financed many projects, namely 30,000 projects in Estonia, whether they are bigger or less big. And coming to a topic, really, is that we're also, as EIC, is involved in energy, renewable energy, for example, also in circular economy. We have kind of taking care of waste management systems, and nowadays turned to circular economy. So everything is kind of somehow logical in the point of view of economic sense and logic. But when it comes to nature preservation and the nature-based solutions, then the economic logic seems not to be quite there yet. And that's actually exactly why we're here today, to think that what could be the issue and thinking behind that. So, just for context, as you maybe heard, that Living Planet Index says that we have lost almost 69% decline over 50 years regarding biodiversity. It's a steep decline still. We are maybe losing like 1 million species from 8 million what we currently have. We have Rio targets, which was agreed to keep the climate below 1.5 degrees and protect 30% of land and sea areas. And then there is also coming Montreal Global Biodiversity Framework, which was signed by 196 partners in 2022. And there comes a clear message that we are missing the financing in amount of $700 billion in order to enhance the biodiversity what we need. So it's clear understanding that we need clearly some more financing in the area. And to start with, maybe you, Rodrigo, is that what is the UN thinking behind these big numbers? Anyway, I just say that maybe we should not dig into too many numbers, but just to give some perspective. And it's just basically biodiversity-related investments are just 0.3% or 0.1% in European context from whole economy. So the numbers are big, but actually the relation is not so big. But issue is still there. It's very hard to find these trillions or billions. Rodrigo, what is kind of thinking?
I would say that one important thing to highlight, Andrus, is what you just mentioned, the Global Biodiversity Framework. So we do have now a plan to some extent, so there is a commitment by countries globally to advance this agenda. There is a recognition that resources are needed. So in the Global Biodiversity Framework itself, there is a commitment by countries to reach $200 billion annually in resources for biodiversity funds. But even more relevant than that is that there is a commitment also to divert perverse incentives towards activities that are damaging biodiversity. So there is also a commitment to reach a reduction in $500 billion a year in harmful subsidies as well. So there is a dual challenge to some extent here. So both looking at increasing nature markets, funds for biodiversity, but also reducing the pressures that are leading us in the opposite way. And it's, to some extent, in the global, from a global perspective, we are in an interesting moment because countries are right now, as part of the Global Biodiversity Framework, updating their national biodiversity strategies and action plans. This will lead countries to establish their national targets. And one of the recommendations in the GBF itself is that countries then lead follow-up with biodiversity finance plans or similar instruments to go about realizing those numbers that they've committed to in terms of how we reach those $200 billion. And I must say that $200 billion is probably a underestimation of the needs. So it's that, and I would say that also there's an increasing recognition of the interconnections between the different agendas, so the climate agenda, biodiversity agenda, and also how climate finance can also contribute to biodiversity finance agenda. So that's those two aspects are more and more viewed as interconnected. So I guess that's where we are. So there is a plan. I guess that's at least in the international level. It's just a matter of how we go about implementing that plan, which is where we are right now.
Okay, yeah, at least I understand we have a plan, so at least we know if something goes wrong, otherwise we wouldn't know. Regarding Europe, the situation is quite similar actually. During past decades, about 1.2 billion has committed to over 400 different projects, and many of us see these projects here today, and yesterday, and tomorrow to come. The interesting is that most of these projects actually, almost 50% of these projects are funded by the LIFE program. So it's really an important player in the market, and the private share is not very big. And number of projects is 76, so almost 80% of the projects are funded. So it's clearly needed state funding. So according to your experience, what is the way we have already come, and what do you see for the future in a European context, where actually basically the numbers are quite similar to other world numbers or kind of relations?
Yes, indeed. Well, what we see, at least in the context of the LIFE program, in the current multi-annual financial framework, is the increase of public funding. I mean, under LIFE program for nature and biodiversity alone, we have 1.7 billion available for funding, and this is the highest in the 30-year history of the program. This is, however, not enough, because our colleagues estimate that for Natura 2000 alone, we need 10 billion euros annually. So obviously, there are different strategies or ways forward to try to increase the availability of funding to address those needs. And some of them are embedded in the LIFE program alone, because we do expect all our projects to have this catalytic effect and to share in the spirit of the solidarity the results and the best practices and solutions with others to have this snowball effect. But there is obviously also a reflection, the broader reflection ongoing on how to mobilize other sources of funding. And then there are many sources and platforms to do that. So there is obviously European and Biodiversity Business Platform, which is an interface for the policymakers and the business to discuss those issues at stake. We have also launched a couple of years ago under the LIFE program the advisory system. It's called Green Assist, which is supposed to help several private but also public entities to make their investments green or greener, and to create a pipeline of projects, green and greener projects that could pick up the interests of the investors. Yes, and there is also we are also trying to see if we can slowly start through EU-funded projects, try to create certain schemes or certification systems for biodiversity. So, for instance, right now we have an ongoing call for proposals which is going to focus specifically on which is going to examine the existing and possible potential schemes and systems for specifically for wetlands. So the reflection is ongoing, and there are some activities ongoing, and we hope that with this we are also moving in the right direction, and also supporting the global agenda and the commitments under the global agenda.
But you mentioned the catalyzing effect. Is this something you're kind of satisfied with the current moves? Have you been able to catalyze or attract some funding into the projects through LIFE? Or what is the situation seems for you? There is a lot of things to be said that, yes, we should attract others, but is it happening?
Yes, actually, of course, it's different depending on the project, and depends also. It's different depending on the habitat types or species our projects work on. But we do have some success stories, and also it's perhaps worth to mention a very specific category of the LIFE projects, which are strategic nature projects, which are focused around the paths, the prioritized action frameworks that are required by the Habitats Directive. And these alone are expected to have a coordination mechanism within each project because they have relatively small budget. They have 10 to 12 million euros budget. And of course, the full implementation on every path costs way more than that. And they all have coordination mechanism to try to bring together funding from different sources to support the implementation of the prioritized action frameworks. So it actually works, and we do have calculations which showcase that this kind of work in the integrated way with the involvement of the stakeholders and also on the large territorial scale helps to bring together different funding sources and also to use them more efficiently. And we are talking here mainly about the European and national funding sources, but also in some projects we also have examples of private funding that joins the effort. So yes, we have good practices to share.
Yeah, it gives hope because turning maybe to you, Kadri, regarding banking and finance. Speaking about numbers, as financial people usually do, that assets under management, according to Morgan Stanley, for sustainable funds is 3.4 trillion US dollars, but it's actually just 7.2% of the total assets. So not very big share, but still, the size is great. But of course, if you look into that, there is some confusion. For example, of course, like I mentioned, there is a lot of production-related projects included in that number, renewable energy, etc., etc. Even healthcare is included in that. So, we acknowledge that private sector participation is just about 20% in all these biodiversity-related projects. So, what is your perspective that what is going on regarding the banking sector, maybe the bond issuance and other things in the banking sector in order to attract more investments into the sphere?
Okay. It's a very, very broad question what you're asking. We from the banking sector, if we want to attract investors, then we need to be very, very sure where the money goes. And for every single one of those projects, to be sure where it goes, we have to provide data and evidence that we know for sure that we have an audit trail in place, data stored in the systems, data field also necessary. And this is the big challenge, to establish processes to determine the loan's purpose and loan's characteristics. As an example, so there are a lot of regulations now coming our way that reinforce the disclosures with regards to sustainable investments and sustainable loans and assets in the bank's balance sheets. EU taxonomy regulation is one of those. The new regulation on corporate sustainability reporting directive goes in the same direction, where financial institutions, or for that matter, all the large entities, will have to perform a double materiality assessment and do specific disclosures. And to a large extent, for financial institutions, biodiversity will be material, at least for part of their loan portfolio, because they're very dependent on the agriculture sector, both ways, because it poses risks. So bank needs to have capital on the balance sheet to manage this risk. And on the other side, the double materiality aspect references that banks also have to start steering the other way around. So their impact towards the outside and to steer it in the positive direction. Now, there is a really long way to go because for a bank, I think we move first if the regulators want us to move, because the effort is really, really large to implement IT system changes and process changes and to move the whole boat, and it is always bound with a lot of resources, so it takes time. And because of these disclosure regulations for the investment portfolio, for example, so we have moved, we have issued our taxonomy reports, and it's embarrassingly low, but it is to be expected across the whole Europe how small the percentage is that our assets go into sustainable activities. We consider biodiversity, for example, if you have to determine something according to EU taxonomy, so you need to see that there is a significant contribution to some of those taxonomy objectives, but you also need to ensure that there is no significant harm. And among those criteria, you need to double check also that there is no issue with biodiversity sensitive areas, for example. So for some loans, some activities, we have implemented the processes how to understand, but it's very early stages. And I think now the next step is, I give you another example. Our main challenge is data. And in order to understand our risks or our impacts, we need to understand on geo-coordinate level where our assets are. And historically, banks don't have customer or collateral addresses based on geo-data. So that's, for example, one of the things we've been trying to solve. And now we've solved the geodata issue for our corporate bank customers through Google APIs, but there are very large issues with the data privacy and security items. So for our private customers, for example, we are not able to use these solutions. So we are still working on how to really determine every single collateral's geo-coordinates and how to integrate it into loan issuance processes. And once we have this done, then we can actually use those platforms like Encore or IBT to assess our impacts and do it really properly, also based on data on a larger scale. Yeah, so I think there are a lot of challenges, and we can talk about it along, but maybe there are better questions to be addressed also by the startups who really deal with the data.
Yes, exactly. That's my kind of next question is to you, Merit, that the data and quantification of the biodiversity seems to be rather complicated. I mean, regarding the carbon markets, you can, well, relatively easily understand that what kind of mathematics is behind that. But regarding biodiversity is certainly an issue, and you have been trying to introduce some new indexes, some new technologies into the field. So what is the situation regarding the technology in your angle, bringing really the private interest into the topic more than just the project leaders?
Yeah, that's a great question. So we started a company back in 2019. So that was the beginning of the carbon hype. So we also looked at the carbon options, but as our main goal was to figure out first how to preserve biodiverse forests, then the carbon options kind of didn't work, because they said like the forest is already growing there, it's an old biodiverse forest, but it doesn't create any additional carbon credits, so you can't finance the project through that. So we started looking at like other options, and obviously there were none. So we understood like what we're missing is a biodiversity component. Like there must be a way how to quantify all of that, do something similar with as has been done with carbon, but like 4 or 5 years ago that wasn't actually a thing. So everything that the companies were asking for was carbon. Like they have the climate goals, they wanted to have some carbon solutions. It has obviously changed a lot through the time. So especially after the 2022 biodiversity agreement, so biodiversity now is a topic. But as we have been doing this for a few years already, then we were kind of like really fixated on figuring out how to finance existing ecosystems. We started creating our own methodology for that. So we hired an actual science team who started building what we call the Ecosystem Integrity Index for forests. It has by now been peer-reviewed and published, so you can find the links on our website. But in parallel, we've found that the United Nations has also done very similar research. So another similar ecosystem integrity index that can be used for other ecosystems as well. So I think from the perspective of like research technology, I think we by now have quite a lot of things to play around with. I think we are now able to assess the health of ecosystems, at least to the extent that is needed to figure out like how to finance an area. I would argue that the question of finance is not related or not that much dependent on the question of data or data integrity. I think there is just a general lack of incentives to finance nature protection. I think like even if we don't have a granular enough data, we are able to detect biodiverse ecosystems, healthy ecosystems, and even if we finance them by, by a hectare, that would be better than not financing anything at all. I think one thing that has happened in the past years is that we have kind of been focused a lot on getting super precise assessments rather than figuring out how to get as much finance into the sector as possible. So now everybody's trying to figure out how to precisely assess their own impact, how to precisely assess the positive impact that they would potentially do. And in the meantime, they're not actually doing anything positive for nature. So the financing gap is still there, and we don't really have a clear understanding of how the private sector would actually start filling the gap. So this is something that we have been trying to figure out as the technology providers or platform providers. So we take research, we take landowners, we take companies, and we have a platform where all of these different stakeholders come together and start actually financing nature protection. And that I think is so if there is one challenge in the sector, then I would point out like the lack of incentives for the private sector to actually contribute to the market. And I would say that although we did have like a big carbon bubble like a year or two ago, that also has been on a decline. So that financing is also now going down. So I think what we need to figure out is like what are the key components the companies are missing to start financing nature protection. Part of that is definitely figuring out their own footprint on nature, which is something that has had a lot of attention and is kind of on the agenda because of the different ESG and CSRD and other regulations. But the reporting itself will not solve anything. And I think this is the key thing that we need to understand, that even though we think we are on the right path, and we probably are, we are still a very long way from actually getting finance into the sector because the companies don't have the incentive, willingness, or even interest to start financing nature protection today because this is not relevant to their core business. At least this is what they think today. So there are definitely ways how to improve that, but just to kind of look at the status of where we are today, I would say that the companies lack the motivation to participate.
I may add to this, partly you're right, but there is a mechanism behind already in motion. And we as banks, so we are the third largest bank in the Baltics. We are system relevant and by that also ECB controlled. And ECB requires us to do very thorough assessment and materiality analysis of risks we are exposed to. And we have already had to integrate into our risk assessment methodology and governance the climate risks and some of the nature risks. Unfortunately, these ones only are limited to date still only to soil, so soil erosion, soil quality, different soil parameters. We don't have the other biodiversity dimensions yet, but we are getting there. And the way it functions now to get the finance, so if we as a bank have to put a price on the risk we take, and we detect based on the data and the reports that a material part of our portfolio is exposed to nature-related risks like biodiversity risk in the agriculture, then we have to establish strategies and mitigation measures to reduce this risk. Because in very simple terms, if we see that the company is at risk, we believe that at one point their business model is not going to be viable anymore and they will not be able to pay back their loans. So we as banks, it is our core business to understand the risks we take. And now that's the newest thing, is that we have to understand also the nature and biodiversity risks. And if we understand the risks and if we take it on our balance sheet, we also price it. And if a company is exposed to very high dependency and risks from the nature side, we have to either agree with the company mitigation measures that the company would implement during specific period of time. And in case this does not happen, then the loan pricing, for example, goes up, or there can be different other type of consequences. And I think that's one of the ways to move nature positive action. And I think this, the other side that comes now because of all these disclosures is that as one of the steps, once we have measured our baseline and status, we will have to establish a target. And in order to move towards this target, it can be, of course, obviously we have already an exclusion list in place that we don't involve in any investment or loan activities that harm natural systems. But it can also be the positive side to promote restoration. So as an example, we are now doing this year for the second year in a row a wetland restoration event. It is still a small fraction to contribute to the restoration of those wetlands. And in order to build the knowledge among the employees, we do it based on two pillars. So one pillar is we support financially professional peatland restoration foundation who is then able to perform professional works with proper equipment. But the other side of this event is that we bring our own employees to the wetlands to do hands-on work so that they actually understand why it's necessary, how hard this work is, and how do you see it after a year's time. So we had our first project last year in Lithuania. Our CEO, he was also participating and fell into a, how you call it, this hole in the swamp. So we had to pull him out. So it was a real eye-opening event for all of us. And we are long-term committed to continue this as well.
Rodrigo?
No, it's just a follow-up comment, because the point on central banks and financial regulators being increasingly looking at nature risks, I guess that's very important to move the sector. So we have, it's a very interesting movement that we saw in the past few years, and this is reflected, for instance, in the Network for Green Financial Systems, which is an initiative of central banks and financial regulators that was initially focused on climate only, issuing a statement on nature and nature-related risks, because it's, yeah, when the financial regulators give that sign, is that the sector as a whole will move. And just another point on the data side of things, because we are a data-driven organization, so we are kind of the biodiversity assessment arm of the UN Environment Program. Many times the data is there, and what is missing is not necessarily environmental data, but is, as you mentioned, is that location data that allows you to associate the risks and impacts with that. So yeah, I guess that's a thing that the initiatives like the Task Force on Nature-related Financial Disclosures, which put a great emphasis on location and location data, will help move this agenda as well. So.
Yeah, and I wanted to actually comment on the thing that you mentioned, which is, I think, like great way how to tackle the issue is that if you get higher interest rates because your nature risks are too big, then I've actually had conversations with a few companies on that and how they translate that into their kind of company point of view is that they are willing to finance nature if that helps to lower the interest rates, but only in the amount that is slightly less than what they would have to pay. They take the delta between what they would have to pay for the interest and then how much they would finance nature. And this is kind of, I think, the perspective that we need to keep in mind. For businesses, it's a very financial transaction. They're not doing that because they want to save the world, unfortunately. Because companies don't exist for that purpose. So companies generate revenues, and if they have to make some additional costs, they have to figure out how to lower the cost as much as possible. So just to kind of give the other side of the perspective of how companies see that. So yes, we will be able to finance nature through these lower or mitigated risks that help to lower the interest rates, but that is not related to how much financing is needed to go to nature. If we started to tackle the question from that perspective, then we would actually use completely other methodologies. Like we would not be using carbon offsets and additionality-based solutions. We would probably use ecosystem services accounting. We would quantify how much these companies are actually using ecosystem services, putting a price on that. So the agriculture companies would actually start paying for, pollinators, being fed on meadows and things like that. But we don't do that. So I think this is kind of like the narrative is completely different because it has been designed from the perspective of companies rather than how we want to finance nature. So I think this is kind of the question that hasn't completely been solved. So I think there are ways how to kind of put it on the right track, but it's kind of not certain yet that it will go there. So it might still be from the kind of consequences-based and mitigation-based for the companies and the financial incentives rather than the kind of the purpose of nature financing itself.
Yeah, that's quite true, that looking into the company activities, then actually most of the income or revenue stream comes from the supply chain. For example, if you're kind of cutting trees somewhere, then you have to take care of these forests, and then the companies are doing that because it's kind of understandable. But on wider scope, actually, there is no too many these kind of good initiatives. So basically, the question is that looking into the nature-based solutions and the biodiversity, then it's interesting that about half of the world economy depends on that. So regarding risk, it's kind of becoming clearer that there is an issue. But on the asset side, so is it really income? Is it how to turn it into revenues? It's a very complicated question. So I don't know. Are we dealing with the right thing? Speaking about reporting, and then maybe we should do something else in order to attract the investments. I don't know, Rodrigo. Or...
I have a comment on it. It's just that it's important to realize that private finance flowing into biodiversity conservation is currently a tiny fraction of the whole. If we go back to the 200 billion annual value committed as part of the GBF, the OECD estimates that we are right now at around $70 to $90 billion a year in terms of biodiversity finance, and only a tiny fraction of that is actually coming from the private finance. Yep. Most of it is coming from multilateral development banks or from national governments. So yeah, there is a need to and we will not reach the 200 billion without the increase in the private sector finance into this space. So yeah, we need to tackle this issue, and how, I guess, the disclosure and reporting is one side of the coin in terms of creating more awareness and visibility and transparency, but this is not the end goal. The end goal is actually moving to action. So yeah, and I agree very much with the comment on the incentive side of things. So if all the incentives are going the wrong way, it's difficult to expect that the financial sector or the private funds will come into play.
Mm-hmm. But it sounds like a bureaucracy is a lot of kind of unclear things to be solved. For example, if we want to do some kind of project, then if we don't have the frameworks in place, then it's very hard to estimate that what is the logic behind. So, but maybe it's kind of, is it helping really? In what perspective? Timely? Can we kind of make it easier for participants to understand it? For example, life, you're aligned with all these new reporting requirements coming on, or how do you see it?
Yes, we are, but it is a slow process. Huh? It takes time, and we also work with a special type of stakeholders. Huh? We do have private entities among our stakeholder base, but many of them are public or non-governmental. So ability and perhaps the motivation to align with the reporting requirements is a bit higher. But having said that, yes, I think we need to have we need to work on the positive example for biodiversity positive projects that are also delivering some additional benefits for those in private sector. We try to encourage that. We have a close to market program as well embedded in the LIFE program, which helps to work on that. But it's slow. The examples are unfortunately still few.
Actually, I'm referring to the UN kind of expression that the big nature turnaround is going on. So it means that it's kind of a huge change we are seeing, and as I understand, the economic system is not really been able to address the issue, and there is a lot of confusion. But usually we somehow see that the urgency is there already, but the process is taking like quite a long way to reach material impact on specific projects and how to kind of involve other parties. So, but banks probably are quite good example that thanks to your requirements, people are kind of starting to think about it, etc., etc. But how to make it really an asset, biodiversity being as an enabling asset, not asset as such. There is no market, so it's kind of tricky questions. So
maybe if I may, I think I really see the advantage of the financial industry and system in steering activities away from harmful activities. So that is already one good side. So it comes from the disclosure, so that if we show that, I don't know, from our investment portfolio, I don't know, in our case, for example, 3.15% is in biodiversity sensitive areas or close to them and potentially harmful. Once this is transparent, then we can start steering on it, either establishing incentives, reporting, exclusions, whatever there are. But to make it positive, I think it's difficult for restoration activities, because we as banks, we also want to earn money. So restoration project per se does not earn money. So there is no means of paying back the loans and earning the interest rates. And therefore, per such, like establishing a bond on the back of an asset like this, we don't have possibilities to finance such projects through the classical bank means. But what we do have is, and I think this is really a great experience what we've gone through now through this whole decarbonization journey. I mean, it started in a similar way. So the first step is to understand our baseline. Once we knew the carbon emissions, what we are financing through our portfolio, we were setting a target for net zero. Once you set this target, you need to start looking sector by sector how to do this. So as an example, we also have a target for agriculture sector, and agriculture sector's decarbonization goes through change to regenerative agriculture methods. And this means it is already protection and better means for the soil, for the pollination, for the bees. And I think for this kind of activities like this, this change, finances will be locked, unlocked. And I think there are most probably also other targets. So agriculture for me is at the moment the easiest to buy into these kind of financing instruments. For the other sectors, we haven't looked at it yet in so much detail to have ideas how to do this, but we're working on it.
And if I may add, like I think if there's a question like how to speed up the process, that I would actually bring out another example of a regulation. So the European Deforestation Regulation, which is where the European Commission like really showed decisive movements and really made the companies like act. So the regulation requires all the commodities listed under the regulation, including timber, soy, palm oil, to be deforestation free. In order to prove that, they have to show that on a geolocation basis. And this regulation was somehow kind of, you know, it was taken, it's implemented, and it will start working like by the end of the year. And the amount of attention it gets from the companies is completely different from what we see for biodiversity. So if companies have been dragging their feet for the past 5 years saying hey, yeah, we need to finance biodiversity, we don't know how to do that, yeah, we should, everybody wants to do that, but nobody's really doing anything. Then with the deforestation regulation, you can see the companies are actually out there looking for solutions, trying to figure out the geolocations, the geodata, the deforestation data. They are actually capable of doing all of that. The thing that is different is that there is a very specific requirement for them, and the opposite, kind of like the risk that they take if they don't comply with the regulation is that they will not be able to enter the EU market. And that is like a 400 billion market, I think, estimated annually. So this is the kind of one thing that makes companies act. So if we would be able to include something like that for biodiversity as well, we would have completely different conversations with companies. So I think until we don't have this pain for companies to do that, they will not do that. As soon as they get it, they will actually be very resourceful, very fast, and very kind of eager to solve this.
Yeah. So, having a look on the timing, maybe last real comments, maybe something we were not discussing for the future discussions, just briefly from you, and I don't know, then we'll look if we can manage to take some questions or not. But yeah, just quick round.
It's just a quick example that I remember. So a couple of years back, we did an assessment of who is funding restoration in Europe, funded by ELSP. And out of 400 projects we assessed in Europe, I don't remember the exact numbers now, but less than 10%, it could well be less than 5%, actually involved private funds. So most of the money was actually coming from government money, grants, into restoration in Europe. So that's just to put this in the context of the topic of the conference here.
Yeah. Well, add anything? Maybe also wish to scientific community that what would help really us to juggle this kind of funding issue?
Yeah. No, but I mean, yeah, but in terms of also the closing remarks, yeah, I think we all agree it is important to reduce the sources of funding. But I think it's important also to have a very diverse streams. And I think there is a space and a need for both private and public because they all come with different conditions, with different challenges, but also with different benefits. So yes, so I think we need both, and I hope we are moving in that direction.
Yeah, and maybe to say something to the scientific community, I think this part is covered so well. Like we have a lot of data, we have a lot of research on this matter. I think the question is now how to implement that into the private sector, the public sector maybe as well. So I think the collaboration is definitely the key here. I think maybe helping those companies who are eager to solve the issue with scientific reasoning behind that. A lot of the times we see companies actually ask if the methodologies have been peer-reviewed, which is not something that you would have like in regular business transactions. So the more peer-reviewed science that we have on the matter, especially in very actionable data sets, forms, maps, the better. So these are the things that we can actually use to create instruments, financing instruments, certificates, credits, everything. So this is actually very, very practical in that sense. And yeah, if there is like one closing remark to make, then definitely we need to focus on figuring out the incentives for the private sector. A lot of finance there. It will be a tiny fraction of the revenues that are actually needed to fill the financing gap. So it's absolutely doable. Just need to be smart on the incentive creation.
Yep.
And maybe lastly from me, actually attaching to what you said earlier, I think we from the banking sector, we're really overwhelmed with all the regulation that comes towards us. It has been an avalanche in the last few years with regards to ESG-related regulations. But for this particular area, even if we are really overloaded, I still welcome new regulations in addition as well, because without regulations, the private sector does not move, or it's very difficult, and then we will stay for 50 years on philanthropy, and that's not enough. So I really welcome regulators to move fast here, have some pragmatic solutions, transition times, but get there.
So thank you for your kind input. Thank you for listening. And just in order not to be gloomy, that just economically on macro level, at least, it's estimated that biodiversity, every dollar you spend in biodiversity is coming back at least $7 to $110. So on macro level, actually, the asset is there. So don't worry. We have to just solve it somehow in cooperation and maybe in the disciplinary way and in the disciplinary way regarding organizations and institutions as well. So thank you for listening and thank you for participating, and hope you at least gained some kind of insight and food for thought. Thank you.